The following is a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Good morning. I'm Brian Akers. Today I have certified financial planner practitioner Alex Monk with me. He has been working alongside me for 9 years. He is a certified financial planner practitioner. He's got a Series 7 stockbroker license. He's been working at Akers Financial Group for 9 years. He is our expert in many different topics. Today, he's going to be using his accounting degree that he received locally. How are you doing today, Alex?
I'm licensed and dangerous, Brian. I'm excited to be here.
That's cool.
I think you have all the same licenses too, though.
Yeah, I think you need to be well-rounded when it comes to licenses to try to be a financial advisor. There's so much going on, and there's no way you can know it all. You just got to do your best at learning and educating and being properly licensed to give the advice every client needs. Welcome to Winning in Retirement. So today I have Alex Monk with me. I'm Brian Akers. And our topic is income taxes, what you need to know for 2020. Are you ready, Alex?
Oh yeah, this is my favorite spot here. I love taxes. Love them.
Taxes are a big part of our bills. Before we bring home any money, for some reason they take taxes out first. The money's gone. Hopefully you're throwing enough taxes to cover what you're going to have due next year. We're going to cover changes in some laws throughout this year and really what to try to expect for next year. So make sure you're ready and not caught by surprise in any way. So in the first quarter here, we want to talk a little bit about 2020 and the tax years that we've experienced right now.
So this year's a little weird, Brian. We had a virus this year, so there's some stimulus money that went out. There's people that may or may not have been on unemployment for a short period of time. Anytime we get a government payment like that, they don't hold taxes for you. They don't even really mention it. They just say, you got to figure it out. And a lot of times you have to send in a form to get them to withhold the taxes. Same thing with your Social Security. When you start that, they're not holding taxes automatically. So it's it's our burden to make sure that we're paying enough taxes. And that first year when you're doing something new, you got to make sure that your tax situation's worked out.
So you bring up unemployment first of all, and unemployment for many people around the country, unemployment has been going on since March. Some people are back to work, thankfully. Some people were able to stay working, but those that had unemployment, so the state unemployment, that payment that comes, you have to actually request to have tax withholding because it is fully taxable, right?
That's correct. So there's a form you got to get, and you got to fill it out and send it in and say, hey, hold some of this for taxes. If you already spent it all, you need to start saving whatever money you got coming in because some of that's going to be taxable. It's going to be different for everyone. How much did you have withheld before you started getting different types of payments? What's your total income for the year? Do you have 6 kids? Do you have 0 kids? Do you have a lot of interest, a lot of deductions that you can take? So one of the other big changes here recently, Brian, is when they changed the way that your itemized deductions work. And that may not sound like a huge deal, but if you don't itemize on your federal side, you can't itemize on your state side. So it has an impact in your whole tax situation, regardless of the state you live in, unless you don't have any state income taxes at all.
All right. Well, that sounds like a lot of complicated information there, but let's talk a little bit about itemized. That's the old Schedule A, and so itemizing is where you can deduct medical expense, and then there's a limit on how much state income tax and real estate tax you can take now, and that started back in 2018. And that's been something that's changed, especially some of the work you do in your tax return, where you do need to compare itemizing versus standard and do it 2 different ways, right?
Yeah, so that's a fun one to talk about because you may think that, because I don't qualify to itemize, even if it's like $1,000 or $2 close, it could have a big enough impact on your state taxes that you want to pay a little bit extra on the federal side, because it can be a big deal overall if you look at your total net taxation.
Yeah, and this leads into a lot of different things on how you handle your charity when you're over 70 and a half, on what you do with your IRAs, things like that. There's a lot of more complicated issues that occur with this. Now, let's go for some basic questions. So unemployment's taxable, federal and Maryland?
Yep.
And how about the unemployment? There's a $600 federal payment also. How is that going to work tax-wise? Because I'm thinking that they could ultimately come back and somehow erase the taxation of it, but I really don't know for sure.
Yeah, I don't know. I'm assuming right now that it's going to be taxable.
Right.
And if they change their minds or they do something a little different, hey, I take the small win there, but I would assume it's taxable.
Yeah. How about stimulus? Remember the stimulus package that occurred, and there are some people who might not have received a stimulus check yet. So is that taxable? And then the other question be, is those that haven't received it, is there any way that they can actually find out if it's coming or when it's coming or apply for it?
As of now, it's not taxable.
Okay.
But there is a way to find out if, one, you qualify for it, and then two, enter your bank information if you'd like them to send you a direct deposit or get a status on your check. And it's through the irs.gov website, and they have a coronavirus section in that page, and in there it's where's my stimulus money or get my payment link, and you can put your information in and it'll walk you through it. Now, you do have to be careful. There's been a lot of people that had issues using that system. You cannot use the full, like if you live on a court, you can't spell out court. You have to use CT, the abbreviation. So, a little tricky.
Right, and there's some income limitations on the stimulus. So some people that might have qualified in 18 or 19 on their taxes for this year's stimulus, if they do this year's taxes and their income is above those limits, they could end up owing it back. And that's something that's going to be done on your tax return next year.
Yeah, and I've heard they may not come after it. I don't know what they're going to do there. So I think they're a little up in the air on how do we track it. If you did have a high income year in 2018 and you hadn't filed your 19 taxes yet, you might not have gotten the payment, but you can go to the site and enter all your fun information in, and they'll tell you if you're getting anything or not. But I don't know how they're going to work it on the backside, and I'm not sure that they really know either.
Right, so there are a lot of things up in the air when it comes to 2020 taxes. Now, 2019 was the tax year where they extended the due date to July. They extended first and second quarter payments until July 15th. But then everything else is normal. The extension date for 2019 taxes is still October 15th is the last day to file the extended taxes, I believe. And then in September here, September 15th is when the third quarter payment is due for taxes, and then the fourth quarter is in January 15th. I'm assuming that's all correct?
That sounds right to me, Brian. And those payment dates are for estimated payments. So if you're one of the lucky few that gets to write a check to the government 4 times a year, the second half of the year is going to look just like it has for the past year.
Right. So I had to pay quarterly estimates. So around July, I paid first and second quarter. And the weirdest thing for me was I decided to just go online and pay it. And so I was going online, and that was very easy. And so we recommend that if you have a payment to the federal government or even to the state government, that you go online to their websites and pay it directly that way, and then print out and save the confirmation.
Yeah, definitely save it. You don't want to lose track of all that money you gave them, because I don't know that they're going to be keeping track of it for you.
They do. They do. They know their payments, and that they're amazing, the software when it comes to the IRS. And at least there's a lot of money spent keeping track of it all. So this year, 2020, has changed some things on taxes. This might be one of those years where your income goes way down, And when your income might go down in a tax year, there's a lot of planning things you need to think about. You could qualify for Roth contributions because of this. You could also qualify for different other deductions depending on what level your income drops. So there's some deductions that are affected by incomes, like student loan interest, like the deductibility of college for your kids or even yourself. There's also deductibility for medical expense. The lower your income, the higher your medical could qualify. So as your income changes, it does change your deductions, and so it will basically lead to this comment. And our comment is, it's not a bad year to do a tax estimate when it comes this fall, just to see where you stand, to make sure that you don't have any surprises next April.
Well, and also when you're uncovering those surprises, Brian, you can find little opportunities that benefit your future. And one of the ones that we love is Roth conversions, and how if we can pay tax now in a certain tax bracket that's going to be lower than we think in the future, or at least a defined amount and on our terms, that can be a big thing for someone's future.
Right. So the key thing here in this show today is income taxes in 2020. There's a lot going on. And some of the things that you need to do is you need to consider a tax estimate to know where you stand year to date, to make sure you're having proper withholdings and make sure it ties into whatever's happened in your life this year. If you change jobs, if you're unemployed for a certain period of time, all of that adds up and piles up into taxation, and that's something that you really got to pay attention to. So in good financial planning, taxes are a big piece of that.
Absolutely.
So what we always got to be doing is thinking about what's going on in our life. Normally when you hear taxes, you get very defensive. You sort of maybe lean back in the couch and go, oh, I don't want to hear that. I'll put that off to next year. I don't want to think about taxes. So what happens is that makes you very defensive in every way. Of course, it's just like sitting on your sofa. You lean back, it sort of sucks you in, right? And you feel like not really doing anything. And your energy sort of, it's relaxing at times, but it's also your energy is not there. What you want to do in your finances, and even with taxes, is to be creating opportunities, finding ways to save yourself money by knowing what's going on with your own personal taxes. People who get through this and pay the proper amount of taxes are ones that take advantage of the opportunity to see what's going on with their own situation. Be in a creating mode, in a solution mode. It's your choice. We want you to win in retirement. So take advantage of the opportunity. You can give us a call at Akers Financial Group to schedule your free meeting. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave us a voice message, and Susan will call you back on Monday to schedule an appointment with one of our team of advisors. Start planning your retirement now by calling 833-946-7384 or visit AkersFinancial.com. Tax brackets are like steps. You need to know which one you are on. We will explain in a minute.
Hi, this is Jesse Cunningham, the owner of Mountain View Insurance, and we are proud to be affiliated with Akers Financial Group. We, too, base our business on integrity, service, and acknowledge that every client's insurance needs are unique to their own situation. At Mountain View Insurance, we specialize in car insurance, home insurance, and umbrella coverages, all designed to protect your assets that you've worked so hard to earn. When serving our clients, we focus on creating a protection plan that is appropriate to your needs. After we determine the correct plan, we then go to shop for you. Mountain View Insurance is an independent insurance brokerage, and that means we have access to many top national and regional insurance carriers. Let us build an appropriate and affordable insurance plan for you, and give us a call directly at 410-262-3176. Once again, that's 410-262-3176. This is Jesse Cunningham, owner of Mountain View Insurance, and I look forward to hearing from you.
You are unique. Just as no two fingerprints are alike, each individual's financial situation is uniquely their own. That's why the Akers Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678-356 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I am Brian Akers, and here with me today is Alex Monk. We're both certified financial planner professionals from Akers Financial Group. We'd like to welcome you to our income tax show, where we're talking about income taxes and 2020 and what you need to know about income taxes when it comes to this year. Alex has an accounting degree. He's a certified financial planner. He's one of the people that we go to for how to implement the tax laws that are going on when it comes to financial planning. So today we're talking about taxes. We're going to talk about some basics and work through things and understand some basic concepts and things to look out for on your income tax. So this quarter, we're talking about tax brackets because they're like steps and you need to know which one you're on. So Alex, are you ready to go and ready to talk about income tax brackets?
You know, I never was a big fan of steps because they're hard to get up, they're hard to get down, but I do like the tax side of it because it doesn't really involve physical activity. So let's do this, Brian.
All right, so let's begin by trying to explain tax brackets on a federal level and try to explain a little bit about how they change and why you need to know why it matters.
So the steps is a perfect analogy. If you look at the tax brackets, they go up and they don't retroactively go backwards. So your first dollar isn't at your last tax bracket. So as you go up in the income, your tax bracket changes. Now some of those steps are bigger than others. You know, if you've ever been to like a garden or a park and you're walking and you can take one step and just with one stride. Some of them you got to take two steps to get on, and that's a big deal for the tax brackets because some of the jumps, especially the 12% to 22%, is a large difference. It's almost double. And there's other ones out there as you go up towards the top of the steps. You get up to that 32% tax bracket. That's a big jump from the last one. So there's some spots along these steps that you gotta watch and you gotta know what happens as the changes come.
All right, so these steps. So if you're playing along at home, an example would be is this: if you draw a little box and you write 10% in it, 10% is the actual first tax bracket. And that's when we get over a certain level. So for single tax filers on federal, the first $9,875, you're at zero taxes. Once you show taxable income above $9,875, you go to a 10% bracket. And for single, that's all the way up to $40,125 for this year. So you have zero, and then 10 is that first step you walk up onto. Now, when you go to the next step, that next step is 12%. So that's not that big of a reach. You just go up 2 more percent. And that for single is from 40,125 up to 85,525. That's when you stay. That's the 12% bracket. Once you jump to 40, you jump into 22. So this next bracket after 12 is the monstrous step. It's a 10% increase, and that's when you make $1 above 40,125. That dollar is taxed at 22%.
And then you said something really important in there, Brian. You said taxable income.
Yeah, I started talking, and in my head I was thinking, oh man, I just said a lot of complex things all at one time, and then I was reading different lines, and I get myself confused. So it is a very confusing topic, these tax brackets. But so let's try to make it very simple. We're talking about single tax brackets right now. We'll talk about joint in a second, but we're at 10, 0, 10, and 12%. Once you are single and make more, $40,125 taxable income, what does that mean when we say taxable income, Alex?
Right. So it's not your total salary, all these numbers that you may hear. So when you get paid, you have things that come out of your income. Some of them are pre-tax. A lot of times your medical benefits, your 401k, whatever other pre-tax things you have. So that comes off of your income. And then that number goes to the front side of your tax return, and they still give us, not as much as they used to, but they still give us a deduction. We don't have any more personal exemptions, but you still get your standard deduction or your itemized deduction. Somewhere for the single people, somewhere in the $12,000 and change range. Married, it's double. And then if you're able to itemize, you get to take off even more of your income. And that gets you your taxable income. So worst case scenario, the $40,000 number, you can add roughly $12,000 back to it, and that would be kind of the income that would get you to $40,000 taxable.
Yeah, so your gross, your adjusted gross income could be like $52,525 if you want to be exact, it looks like. So that you take off the standard deduction, you end up being at $40,125, and that's the last dollar that's taxed at 12%. If that taxable income is the next dollar you pay 22% federal tax on that. And so that's called jumping a bracket. And some people with your steady income or pensions or other income that you receive, this just might be the bracket you're in. You might be in the 22% bracket and you can't change it. And so that becomes something like a new reality where that is my tax rate, and how can I do the best I can at that bracket at 22?
Yeah, and some things change at that $40,000 number on the single side, Brian, and one of the important ones is going to be capital gains.
Okay.
So at $40,000 of taxable income, the dividends and capital gain rate goes from 0 to 15. It goes from non-existent to existent.
It's a very weird thing. The capital gain rate is a different bracket than the regular tax bracket. So the tax bracket's $40,125, but the capital gain bracket's $40,000 even. Just another wrench in the whatever you want to call it.
I really wish they would have just made them round numbers like that. I'm not sure that the 125 is out there making or breaking anyone's future. So I don't know why that's the case.
Right. Okay. So there's tax brackets, and we began to talk about that. Then there's capital gains brackets. So for single, from 0 to 40,000 of total income, you're in the 0% capital gain bracket.
Yeah, that means you can make money just by owning assets or getting dividends, and it's tax free.
But then you jump up the next bracket from 40,000 to 441. Capital gains is only 15%. And then above 441,000, capital gains is only 20%. Thus, it becomes one of the cheapest taxes long term for higher earners. But that long term capital gain rate being 15% is higher than the 12% bracket for that $125.
Right. So there's some spots where you can argue that ordinary income tax is better, but they're very, very few and far between. There's also an additional investment tax at 3.8 once you go over a certain level of income. It's roughly $200,000 for single filers, $250,000 for married, which again, I don't know why those numbers aren't double, but that's another issue we could talk about for hours. Really the highest rate that you could pay on capital gains is 23.8. That is miles better than the 37% ordinary income tax rate.
All right, let's finish the single bracket. The single bracket, so you got 22, and then when someone makes more than $85,525, between $85,525 and $163,300, they move up to a little step, the 24% bracket, and that 24% bracket is all the way up to $163,300, and then the next step, if you're single and you make more than $163,300 as taxable income, you then take a big step. You go from 24 to 32%. And so there's two big steps you got to look at, 12 to 22 and then 24 to 32. And that's one of the things about income planning that you want to watch, changing brackets on the short term. You want to balance any financial tax decision on where do you stand and what bracket are you in? What step are you on?
Yeah, and that's an important one and something we look at a lot for our clients, Brian, is if we need a big lump sum of money and we're, let's just say, in September, which we are now, and you need it by, now, but in order to pay the tax on it, you'd have to take an additional withdrawal. A lot of times we like to split the tax years up, and that way, hopefully, we can avoid jumping into a higher tax bracket, especially if it's a 10%, 8% difference. And we also avoid, other impacts like your, increased cost of Medicare if you go up. So there's other thresholds inside your taxes that you need to be aware of because they can have waterfall impacts on the rest of your income.
So a tax estimate is where you take a look at where you stand right now and where you're projecting to head. And what you can do is look at things that can help that. Now, doing a pre-tax 401k, 403b, TSP, simple IRA, any way of saving your money like that pre-tax will lower your taxable income. And by lowering your taxable income, that could drop you or keep you in a certain bracket. If you're a W-2 employee and have no side companies or any other businesses or investment income, this might be your only true deduction that you have to lower your income into another bracket is pre-taxation, or to basically pre-tax your savings by doing a 401k like instrument when it comes to your qualified savings. So when you're looking at tax planning, it's all about exactly who you are and what's going on in your life. That uniqueness about how you make money also dictates how you should handle your taxes.
Yeah, there's not a whole lot that you can do if you're in certain situations, but at least you know. Two, you at least know you're maximizing out everything that you can. And then if you're in the situation where you're going to owe some money, it's nice to know it's not going to be a surprise, right? You don't want to have to get a loan from the government.
Right, so single tax filers, you guys could pay 32% all the way up to $518,000, and that's when you move. From 32, it goes from 207 to 518 is at 35%, and then to go to the next bracket above 518,000, that's 37% is the current highest bracket. These are all complex issues. We just covered the single tax brackets. We still need to cover joint tax brackets and a whole lot more of information. The key thing about retirement planning is knowing your taxes so that you cannot have to worry about them. Having a financial advisor that helps you understand taxation of the income that you're drawing, of how you save your money is very important. Akers Financial helps with that. You can give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave us a voice message, and Susan will call you back on Monday to schedule an appointment with one of our team of advisors. Start planning now. Call 833-946-7384 or visit AkersFinancial.com or go to our Facebook page. Right now, you can withdraw from your IRA with no penalty, even if you are under 59.5. Should you do this? We will talk about that when we come back.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC. Are there times in some games you wish you could just turn on the TV at the 2-minute warning? Because that's the most important part of the game, right? As a fan, these are the most exciting moments. Your team could take home the victory or crumble under pressure. But when it comes to your retirement, don't wait until the last 2 minutes. So much can happen in the final working years before retirement. Whether you're in your 50s or 60s, near or already in retirement, there's still time to put a plan in place. Don't wait until right before you retire to begin planning for your future. Can you win the retirement game like that? Come in and talk with the team at Akers Financial Group. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I am Brian Akers. Here with me today is Alex Monk. We're both certified financial planner practitioners from Akers Financial Group, and we're here to talk about income taxes today. Alex, how you feeling for the second half?
Whew, I'm just getting warmed up. I'm like a tax nerd, Brian. This gets me going.
All right, so tax nerd usually means we understand the law, but then you have to apply that client's unique financial plan to the tax law. That is where a financial advisor earns their money, earns their keep, and helps you to maximize what you can do within all the rules and laws that are out there. It is impossible to know everything that could affect you. And so what we want to do today is talk about the income taxes in this 2020 tax year. And one of the biggest things that happened this year is the CARES Act came out March 27th. It was part of the $2.2 trillion stimulus package. And in that package was the ability to withdraw from IRA or qualified retirement plans without penalty if you're younger than 59 and a half. How does that work, Alex?
So it's called a CRD. A coronavirus-related distribution. It's funny, Brian. I printed out all the different rules from my wife's plan at Hopkins, and I printed out different plans from different clients to see if everyone's rules are matching up. And we'll say that they're close.
Okay. All right. So imagine we're in a basketball game, and there's 3 refs on the court, and each one has different rules. You got to know which game you're in. So wherever you work, you got to know what rules apply. So explain the basic of what we're talking about.
Okay, so if you've been impacted by the coronavirus, and that's you have it, you've gotten it, your spouse has gotten it, or a lot of them, the way they read is if you've been impacted negatively by the coronavirus, meaning economically, whatever it is, then you may qualify for an early distribution from your retirement plan. They've also increased the amount of money they're allowing people to take. So it used to be $50,000 is the max. Now it's up to $100,000. And they've also increased the loan options as well. So you can take a $100,000 coronavirus-related loan or distribution. So that's really the gist of it is they increase the amount you can take. They waive the penalty. Now, they did not waive income taxes. So a lot of people out there, just make sure you know the money's still taxable as income. You just don't pay a 10% penalty. That's a big deal.
Is there any special exemptions or exclusions with this income?
As far as...
There is some of the rules are saying that we have up to 3 years to pay things back, and you might pay taxes over time and things like that.
Yeah, they give you can structure how you pay the taxes back over a 3-year period is what they're saying. I haven't seen the new tax forms and how they're going to keep track of that or how you opt into that yet.
Right.
I would prefer to just pay it myself and be done with it, but there will be a way to push it down the road a little.
Now, is there a way of doing a rollover where you put the money back? Is that possible?
Yes. So they extended that through, I don't know the exact date on that, but I know that you can put money back in outside of your 60-day rollover window.
Right. So what's happening with a CRD, a coronavirus-related distribution, is you have to be injured in a way from coronavirus. Financially, has to be yourself or someone in your house for the necessity of this kind of withdrawal. It can't just be a technique where you move money around. You have to have some proof of that. What that proof is of course not all known yet. That's something that they're still working on. But the idea is that the CRD is something to research, something to look into. If you wanted to, if you needed money right away, if you need money to survive and live on, if you need access to some of that money, it's very important that that's an option. If you're under 59.5, there's no penalty.
And so this is not us saying we recommend it, but it is a thing, and it could help people out there, right? It could benefit you more than taking on debt or getting into some type of a snowball situation. But like we were saying earlier, you got to know where you are on that tax bracket step.
Right. So on the CRD, there could be a 3-year payback, but your company plan might not have that as an option. Also, the loans, the ability to take out a loan, there are deadlines. In the original law, it was September 23rd, 2020. If a new stimulus package comes out, that could change that. But if you're looking at this, there's sort of a deadline on loans where you borrow from a qualified plan at your work. The hardest part here is understanding the rules at your work. So you'd have to go on your HR website. Is that the best way, Alex?
HR website or your company-sponsored plan, whoever the custodian is, wherever they hold your 401k. Either one of those places are going to be the best place to start depending on how your setup is.
All right, and this is not $100,000 per IRA account or $100,000 per 401k. It's $100,000 per person total. So be careful on that. If you're diagnosed with COVID-19 virus or on an approved test, or have a spouse or dependent who's diagnosed, or experience adverse financial consequences on account of being quarantined, being furloughed or laid off, or having your work hours reduced, being unable to work due to lack of child care, closing, reducing hours of business. Those are all CRD requirements that you could meet if you needed money out of your IRAs this year. So the idea is if you took money out of the IRA to survive, this law sort of comes back and says, oh, you don't have to pay a penalty, but you do got to pay tax. That's what we're trying to get at. There are some things going on this year you need to understand. Make sure you pay your tax.
Yes.
All right,
I don't know how they're going to prove that, and let's leave that up to them to figure it out. But I would say it's there for people that need it.
Yeah, I know in 1998, back in the day, when the first Roth IRA came out, you could convert your Roth and then spread it out over 4 years, and there was a special form and calculation to do that, and that worked out with leveling out taxes. And the reason that's a good idea is because of tax brackets. So earlier we talked about single tax brackets, and we want to finish up the tax bracket talk by talking about joint tax brackets, because knowing these tax brackets makes sense. If you pull money out for a CRD and you spread it out over 3 years and level it $33,000 a year, what you're doing is lowering your income and maybe leveling it within a tax bracket. Very important. So joint tax brackets, Alex, where do you begin with them?
So Brian, they really they came up with this interesting calculation on how to figure out these tax bracket levels, and what they did is they took the single ones and they multiplied them by 2.
In every case? That's amazing.
Yeah, pretty much across the board. It's, well, except for the top. Now, when you get to the top, they change things a little bit. Yeah. But all the way up through the 32% bracket, which is $414,000 for a married filing jointly, is the top of the 32. It's essentially double, which is nice, right? So you get double the amount of room where you can earn at a certain level, and they also double some other things in there for you. They double the standard deduction, And really the married filing jointly are the most favorable brackets. They're similar to head of household, but that's going to be where you have the opportunity to earn the most amount of money inside of those tax brackets, but you have to remember you could have two incomes. So that's kind of the theory there. And then once we get to the higher end of it, over the $600,000, pretty much, I guess they kind of lowered the top bracket versus single filing, which is 518 and 622. So if you have two people earning $500,000, it's not quite as good.
Right. So they start taxing at the highest possible rate, the 37% earlier for married filing jointly than the effective change at single or even married filing separately. So if we have two spouses and they both make very high income and they're in that $300,000 to $500,000 range or higher, married filing separately is a calculation that people need to do to see if that makes sense for them in their exact situation. And that's something you have to look at each and every year, and that's why tax software is so important, the more complex when you look at tax returns. So yes, we do have a few clients that we do that with, where we end up doing we have them file separately. We work with CPAs. We work with tax groups. We enjoy the tax concepts and the tax implementation of the advice and knowing the situation. So when we start with that unique financial plan, that unique ideas for that client at Akers Financial Group, what we really want to know is, where do you stand? And where are you at now? You need to know what step you're on, what bracket you're on, especially when it comes to any and all income, or if you want to take more income in this year.
And look, you can go back and amend your taxes for 3 years. I can't tell you how many times we've looked at people's tax returns in that first meeting and been like, oh, you need to call this guy and get him to fix this, this, and this. And you get a check in the mail. That's a lovely thing.
And that's why we ask for 3 years back. So you're allowed to amend and actually get a refund if there's something that we can find that we can save money on our taxes. So you can go back 3 years. What's nice about being a financial advisor and being a local and independent financial advisor is that we're not controlled by a company, a large company, a company from New York or wherever, that's telling you exactly what to do or what advice to give. Being local and independent and not reporting to a big company, we report to you. We have offices in Forest-Hill and Lutherville, and obviously we can work with anybody around that's listening because of our ability to use the vehicles. Also, the virtual has made it incredible to be able to work with people all around the world. You obviously might not be coming to the office at the moment unless you want to do mask-to-mask. We highly recommend you do one thing, and that is begin winning in retirement by setting up a free meeting with us. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you leave us a voicemail, a message, and on Monday, Susan will call you back to schedule an appointment with one of our team of advisors. To start planning now, call 833-946-7384 or visit akersfinancial.com or go to our Facebook page. Are you ready for next year's tax bill? Tax estimates are so important. We'll explain why next.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Alex Monk. We are experienced financial advisors, and today we've been talking about how you can win in retirement by understanding income taxes and the effect on 2020. This show is being recorded, and that show will be available on our website, akersfinancial.com, next week. By Wednesday next week, you'll be able to go to that website, and you can hear the rest of the show. Imagine that you missed a quarter of the show. You wanted more information, or if you wanted to hear a certain piece again, you go to akersfinancial.com, or you can go to akersfinancial.com, look at the top tab, and you'll see radio over to the right. Click radio. It'll have the history of all of our shows. You can go back and listen to different parts. So why don't you go ahead and do that? All right, Alex, you're laughing. I can see you laughing at me.
Well, a lot of people out there are driving right now, and I think it's nice that they're in their vehicles, but we also have our vehicles, right, Brian? We can drive too.
Well, I was trying to get across the concept that a radio show is amazing. It can go all the way to Ocean City. It can go towards the mountains in western Maryland. We have offices, Farmville and Lutherville, and we have vehicles to drive to see people. And so vehicles, I guess driving to see people is an option with social distancing and mask and everything. The crazy thing is that we have a lot of virtual meetings, and I get locked in my Zoom room for a long time, and I look forward to the day of driving around again. So it's on my mind that it's fun being a financial advisor, and I've enjoyed a career for 30-some years of working with people. And this year's been different because we've had to develop ways to work with people, and virtual is the best thing that I can do, where I can see people's eyes, their reactions. We can talk back and forth. I've enjoyed that. And this fall, we're looking forward to the mask-to-mask meetings so we can sort of get going and help people where they are, you know?
And it's nice. Like, I have never been into all my clients' houses until this year. Like, I've been to a lot of people's living rooms through the Zoom room meeting. I've seen a lot of people's little closet that they got pushed into to do all their virtual meetings. So it's
and
been
the dogs, the grandchildren, the kids, the cats that jump on the keyboard. There's been a lot of things, but it's been enjoyable. Technology is amazing. There's nothing like a personal talk though. But the virtual gets as close as possible, which I think is pretty nice. So this show has been about income taxes, and what we're promising this section, the fourth quarter here, is to talk about tax estimates. How do we do a tax estimate for one of our clients?
Okay, so basically what you need is your last year's tax return, and what that'll show us is what kind of stuff do you have that's not going to show up on your W-2, because typically your year prior is somewhat similar to the next coming year. And then we need current pay stubs. And from there, pay stubs, depending on how you're paid, if you're salary, it's a super easy calculation. You figure out how many more pay periods are left, and then you just add the numbers together, and you can get pretty spot on numbers. If you have some overtime in there or things like that, it can get a little bit harder to project out, but you can use, whatever assumptions, get a baseline scenario, plug it into the software and say, all right, this is kind of what you're going to owe, and this is kind of what you have withheld, and here's some ways that we can try to change that number. And now's a good time to do it because we still have 3-4 months left in the year, and that's enough time to spread over like payments if you want to add your 401k or something like that.
Right. So tax estimate, very important when anything has changed in your life. Unemployment, change of jobs, retirement. Because what happens is this. Let's take a typical retirement scenario. One of the highest income tax years of your life is your retirement year. So that's not the year to take an additional 401k withdrawal. It's not the year to cash something in if you can wait till the next year, to the next January 2nd or 3rd, to wait just a little bit to push that tax into the next year. Knowing what step you're on, what bracket you're on, will help you make a wise decision. Doing a tax estimate helps you know where you stand right now. So when you look at our website, akersfinancial.com, you look under documents and you see describing your financial fingerprint. Basically what we're asking for under those forms are things such as pay stubs, your taxes the last 3 years, because we want to look at where you are right now so we know the taxes, so we don't have any surprises next April when things are due. Knowing your taxes is very important in every decision we need to make as you enter retirement years.
And even for, I do this for clients now, Brian. I want to see how much income we have for the year because I might want to take out more. I want to get as much money out in that 12% tax bracket if I know for a fact that in the future a client's going to be at the 22 level. I want to maximize those tax brackets. If you have 10% more of your money, that's a massive deal. That's a lot of money.
Absolutely. So $1 million 401k, 10% difference is $100,000. That's why it matters. It matters for the long term for you and your family. What's amazing is this. When people retire, let's say they retire in their 60s, 72, based on the Secure Act, January 1st of this year, that's when you have to start taking money out of qualified retirement plans. There's a period of time where you control your income. And the reality is, if you were saving very well through pre-tax at your work, you could be facing a higher bracket when you hit 72 than you are now. We recommend levelizing your taxes by paying some tax today and maybe converting that to Roth IRAs, maybe paying off debt, doing things you need to do to clean up your financial planning, and paying tax at the lowest possible bracket so that we don't get hit at a higher bracket in the future with all that money.
And my favorite part about all this is paying taxes when we want to. Not, we show up with all our papers, give them to the CPA, and then just hold our breath, cross your fingers, and hope it's right. No. I want to pay tax when we think rates are favorable, when there's strategies that help, and I think right now taxes are in a good spot. We know what they are. We know that they may go up in the future. Let's pay them now. And then we take that unknown. And that's one of the biggest variables in financial planning is what do we not know in the future? And the big thing is tax rates.
Right. We know that the tax brackets right now, they are created to sunset, to stop being at these brackets in January of 2026. They're going to go back to where they were before, which would be the brackets will all move back up and deductions would go back to where it used to be. That is the way the law is set up at the moment, but things can change. So paying tax in these brackets we have now is some of the cheapest tax brackets we've seen in many, many, many years. So we highly recommend that you look at tax estimates as a way of getting sound financial advice. This week I was working with a widow whose husband passed away earlier this year, and I was explaining to her that this year is her year to file jointly, and then she begins to file as a single person next year. And so with her pension and other income, she's going to be at a higher bracket next year than she is this year. So if we need any extra money to take out of the retirement accounts, we really need to do a tax estimate and calculate how much to withdraw to pay off a debt or two so that we have a very clean financial future.
And it's nice to even take money out knowing that you can get more out at the 12 or than you can at the 22. And you could either go to your Roth or you could sit it in and build your emergency fund as long as you realize that tax on your terms, especially in the situation where you have a filing status change. And that could be
filing status changes are big deals. They're really big deal. Transition of life. These all apply to your income tax. 2020 is a very, very strange, very weird year when it comes to just general life. It's also a strange year when it comes to finances and income taxes. Do we know if next year's will be extended? We don't know any of that now. We do know that we're going to owe tax someday. We're going to need to pay it whenever they have the date. Right now, it's standard 2021 when our 2020 taxes are due. They have the standard dates set up at the moment, and that's what we need to work for and make sure we have everything set aside to pay the proper amount of tax over time. So far, the show, we've been talking about income taxes, tax brackets, the CARES Act, the COVID-related distributions. We've talked about a lot of things. We talked a little bit about Roth conversions. There's a lot going on when it comes to taxes. You can give us a call anytime you like at 833-946-7384, and we can sit down and talk about your exact situation. And whatever that question you have, we will work on that for you.
Oh yeah, I'll have people be like, okay, Alex, we're over the taxes now. Let's move on. And I'm like, well, let's just talk a little bit more about these old taxes. And they're like, nah, we're good.
So many times people will come in and they'll have one question, and sometimes that first question is there something better I can do? Is there a way to reduce my tax now and to the future? Some of the problems we've seen are people that have all their money in one type of investment, and that means they have one type of taxation. They don't have any choices in their retirement years. Knowing what you're saving, how you're saving, what you're saving to, is it pre-tax, after-tax, tax-free? You need to know all those aspects to make sure you maximize your money and minimize the amount of tax you pay in a lifetime.
Right, and by having those different types of accounts, it gives us the biggest thing that we need, and that's options. Having different options is a huge thing in tax planning.
That's right. So Alex and I are putting together a show for next week, and that show, so next week on Winning in Retirement, we'll have a show on the Roth IRA, the whole show, how it works, and that you may need to consider a Roth contribution or maybe even a Roth conversion. We'll cover a Roth conversion, how it works for you and the long-term planning. Remember to pay tax now and never again. So Roth IRAs, that's going to be the show next week, right, Alex?
Can't wait, Brian.
All right, well, thank you very much for a good show today. We'd like to thank you all for listening. In retirement, some of the biggest worries of your day should really only be about where you're going to drink your cup of coffee. It shouldn't be on anything else. It needs to be where every day seems like a Saturday, free of the stress of time commitment and everything else. Your retirement income and your investments should be taken care of by your financial advisors. At Akers Financial Group, we want to take care of our clients. We try to take care of our clients one client at a time. We invite you to do is this. Give us a call at Akers Financial Group to schedule your free meeting. You call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave us a voice message, and Susan will call us back on Monday, or schedule an appointment with one of our team of advisors. Start planning for your retirement now, 833-946-7384, or visit AkersFinancial.com, or you can go to our Facebook page. The Akers Financial Group on Facebook page is another place you can reach us through that. Thank you again for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment.
The preceding was a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at akersfinancial.com. Member FINRA, SIPC.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
Broadcasting from the Thompson Creek Window Company studios, the one window replacement company that does it all. This is WJZ-FM, HD1 Catonsville, Baltimore. 105.7, The Fan, a radio.com sports station.